Welcome to this brief summary of Trader Sapiens evolution, aka from compound interest to leverage compound squared. Let me explain what I mean. Some of the inventions I'll discuss you already know, but the power of some of them you haven't probably fully internalized, and this is what this tutorial will hopefully achieve using some numbers. So what is the first invention that Trader Sapiens came up with? Well, you know it. It's a very old one. It's called compound interest. And the effects of it you can see today. Basically, if you start today trading 3,000 euros, grow them yearly by 20% per annum, in a bunch of years you will have multiplied your capital by a factor of 9, which grows obviously exponentially as long as you continue to consistently deliver this 20%. Now this is very tempting, isn't it? So many traders have tried the power of leveraged compound interest, which is another way of saying is, well, if I know I can multiply money easily, why stop at 20%? Why not go for 50% or maybe 100% per year? Isn't that an amazing way to get from 3,000 bucks to 12 million in just 13 years? Well, sure it is, until you crash. Because the problem that you're ignoring when increasing the leverage is that you're also increasing the risk. In other words, you're going from a focus on return of capital, where you're as good as your average trade, going to a strategy which is focused on return on capital, which is basically betting everything that your last trade is going to be good until it isn't, and we've just seen what happens then. This, of course, brings you to the next invention, which is risk-return maximization, i.e. trying to make the most return given a limited set of risk that you feel comfortable with. And some people refer to this as trading skills. Now, they are very powerful in the sense that they can help you grow capital, but there's this snag. And the snag is, well, if my equity is very small, how the heck am I going to grow to a level where I can sustain my lifestyle? Is this it? I mean, is there nothing else that we can do about this? Of course there is. You're probably thinking that, your trading skills could be investable, and if you have a skill to grow money by 20%, why stop at growing just your money when your father and his golf buddies have a ton of cash and want to grow it? Now, this is a very appealing business model. Let's say I continue delivering my 20%, continue having my starting equity, but then after being able to prove it in, say, 3 years that I can grow money at 20%, then probably I'll be able to land 1 million in investor capital and negotiate a success fee that for every euro that I make, I keep, say, 15%. Then this is going to result in an additional source of income for me, which I can see here. As that income is paid to me and I deploy my trading skills to grow at 20% per annum, hey, here's magic. We have compound leverage because I am delivering returns to investor of 17%, which is basically my 20% minus the success fee. But my trader returns have grown by 75%, which is something I could not have achieved with my trading strategy without leverage, and we know where leverage leads. So this is the very, very tempting model because it increases your returns without forcing you to increase the risk. And this is a very, very powerful feature, as you can imagine. Unfortunately, this is not scalable because to convince your father and his golf buddies, you have to go and talk to them and explain to them how good you are, how fantastically your strategy works, and so on and so forth. Crucially, this is not a one-off job. The more investors you attract, the more phone calls you'll be getting that ask you, why did you have this drawdown, and why should I buy stocks even though all you're doing for them is offering forex, and so on and so forth. And very quickly you'll find that you cannot attract more investors. Now there is a better model than this, and it is called compound investor leverage. And here's Warren Buffett, who's gotten to be the third richest person on earth, and actually the one has made the most through investment returns alone. And here's some news. He did not waste a second in his life pitching to investors. And the reason for that is that he knew compounding. By the way, if you're wondering how much Warren did in terms of profit, you'll be surprised that he never delivered on average more than 20% of investor returns. So how does compounding work? Well, it's very simple. You still start with a small enough capital, just as he did. Then you land your first million of investors, just as we were doing. And instead of focusing on attracting more investors, what you do is continue to deliver 20%. Nothing else. And why is that? Because happy investors get you more investors. So you can expect, as long as you deliver the 20% consistent profits, that your assets under management will grow by word of mouth. And in this situation, what happens is that you have compound leverage that even increases your returns further. The good news for you is that this was all done in a life when Twitter didn't exist, i.e. news did not flow so fast. And by the way, do you know anything more viral than consistent profits spreading peer-to-peer? Well, you probably don't, because of course consistent profits year in, year out are a way to multiply money, in other words, free money, and there's nothing more juicy to spread than that. If you want to internalize the power of that, and this model I'll be very happy to share with you if you're interested, you'll realize that the fastest way to grow your money is compound leverage, as we were saying. And the biggest driver of compound leverage is at what speed the investors talk to each other and share the news that there's a guy who's making 20% profit year in, year out, like a clock. So the question really for you and for us at DarwinX is how fast this growth rate could be. But just to give you an idea, just by saying that it grows by 100%, look at your equity with compound interest at 20% and have a look. And what you see is that things are exploding in terms of what you could be making. So what is the good news for you? Well, the good news for you is that everything is under your control, because all you need to do is deliver that profit of 20% year in, year out by proving your investable attributes. Nothing else. You don't need to pitch to investors, because they will come by themselves. Further, you realize that viral is nothing that you cannot contribute to, but rather you've been lucky, if you're watching this video, to know what compound leverage is and be in a position to share the news that there are some fantastic traders out there who can make very good money. So this is pretty much it. Today was just a thank you for all those of you who provide regular feedback to these videos. They help enormously in coming up with new ideas and explaining stuff that is not clear about us. So there you go. Thank you so much, and hopefully this will help you going forward. If you're interested in getting access to the Excel sheet, just email me at juan@darwinx.com. I'll be very happy to share. Take care and happy trading. Bye-bye.